kind of anticipate that there's a little less volume. There can be some head fakes here. And as we're going to dive in this morning, this is kind of prime squeeze territory. So I hope you're doing well. Good morning, Doji, Ed Mines, builder.ca. My alarm clock's going off in the other room. That's going to drive me nuts for the next 20 minutes. Good morning, Secret Agent Charlie. Good morning, Doji. Good morning, BS Smokey. Hope everybody's doing well. My friends down there in Texas as well. We're going to dig into this momentarily, but as you know, we are here for one reason and one reason only. Hey, look, energy transfer. Look at that. Hey, there he is. There's Kelsey. He's got his striped shirt on. That guy just bought a lot more of his own stock, $33 billion, $1 million in shares. Morning momentum. Hey, look, you guys are changing things as we go. Look at that. ET go home. All right, let's dig in real quick. As you know, you're here with us for one reason and one reason only. And that is because you're looking for the best ideas to start the day. Bitcoin adding 2% today. That's good positive news for liquidity. We know that Japan is engaging in a relatively sizable amount of stimulus to stabilize this financial market. The Nikkei adding 0.4% this morning, up at 49,000. And this is the question of like whether or not this is a trap day or not. Is this a safe environment? You have to focus on the technicals. You have to be looking at expected moves. You have to keep your stops tight because in this environment, we are still in a negative momentum environment. We are -7 this morning on our intraday numbers. And why is that good? Well, right now we are seeing a decline in the number of stocks that are falling that 5% on the week, down on the month, and beta over 1. That is our intraday reading. So it's a little quiet right now. We'll get a little bit more active in the next 30 to 40 minutes after the bell opens. But for right now, we are seeing a slowdown in selling pressure. We are not seeing a bid up right now in buying pressure. And that is kind of why I always say this is the type of environment where squeezes can happen, lower volume weeks, lower volume environment, looking for a little bit of a bid. What that means is pretty simple. If you go to the SPY or you look at the Russell, you can see that the S&P 500, that the SPY is still under its 50-day EMA and its 20-day EMA, meaning they're exponential moving averages. And you can go down to FinViz or anywhere else, and you can see that right now you see the flows right here. We are under the 50. We're about 1%. We're 1.5% away from the 20-day moving average. What I have said time and time again is these are going to be key resistance levels. If funds are still selling, and they have been selling pretty aggressively for the last couple of weeks, if funds are selling, they will likely do so if we get back above that 20-day moving average where a lot of the algos turn back on. Now, if you look at this is the global equity position of systemic macro. All you need to know right now is that commodity trading advisors are still very, very long in this environment. And if they are concerned deeply about the state of affairs, whether it's Japan or whether it's any of the other issues that are tied to our regional banking sector, what is happening with our reserves, this is the type of equity, hundreds of billions of dollars, that can be dumped relatively quickly. So once again, reminder, look out below. If we squeeze up to that 20-day, I'm going to tell you right now, if we squeeze up to that 20-day and we start to sell, this is who is doing it. So be very cautious in this environment. Once again, you get above that 20-day. If we break back under, that can be a look out below type of event. Russell 2000 remains red, NASDAQ remaining red, S&P 500 as well. All right, you need a smoke alarm beeping for a new battery. What? I don't know what that means. I'm going to drink this terrible coffee, and you're going to see my reaction to it. It's going to be very disappointed, and then we'll go into the rest of the show. Ugh. That's terrible. All right, but it's working, and that's all that matters. All right. We'll talk about the runner in a minute. Let's talk about this week real quick. The MSCI index will see some changes this morning. CoreWeave, Nebius, Insmed will join. Passive flows will hit around 9 o'clock this morning. Forced buying could overwhelm fundamentals in a thin market. Hey, I've just given you three names to be active and to trade around key moving averages. Look at the 8 and the 20 adjusted on CoreWeave today. I'm not saying that it's a great company. I don't care. The only thing that I care about is whether or not the stock is moving. And if we can get some more violent moves, we've seen a little bit of running ahead of this. This could sell off. We could see people selling into this pressure. So, once again, if we break and we see that 8-minute EMA, 24-minute EMA, and the 60-minute, and this starts to go in the other direction, don't be afraid to go and short it. And then if it starts to rotate back up, go long. You can do the exact same thing with volume weighted average price. Tomorrow, we have Dell reporting earnings. Options are pricing in a 10% swing on that stock, which means it's going to be a good name to trade on Wednesday. Intel has also moved with Dell 8 straight quarters. So INTC is back in play as well. I will tell you that regardless of what happens with Intel in this short period of time, I am long Intel over the longer period of time, but I am looking for momentum to return back to this market before I aggressively bid back into Intel. It is a swing trade for now. Wednesday, the Fed Beige Book will arrive at 2 o'clock. I will be in a car driving to North Carolina. It's going to be awesome. Nothing I enjoy more than holiday travel. At least I'm not getting on a plane. But the key thing around the Beige Book is that repo markets remained stressed. The Fed remains divided. And at this moment, as we dig deeper into the December period, we have seen the odds of a rate hike increase dramatically. We've come back from the darkness in the last couple of days. 42% odds of a rate cut a week ago. Now we have risen back up to 75%. They have said that there is some more control in inflation, at the same time talking about some weakness in the job sector. I'm going to tell you right now, the reason they're doing it is because of Japan. I'm just going to let you know, it's because of Japan. They want to cut rates because of Japan. They don't want to do. It's Japan. Oh my gosh, it's Japan. But nobody is talking about this, so let's just keep it as it is. As we move into this morning, again, 75% chance of a rate cut. Look for that to continue. Thursday, we don't do anything. Thursday, I will be in a coma most of the day after eating turkey and watching a terrible football game on Thursday night. But markets are still open in Japan. NEN or Bank of Japan shock while America is offline could slam futures. Friday is going to be a very busy day, despite the fact that it is a short day for us. We close at 1 o'clock, but you know what? We're going to be here. I got to get up. I got to do the show Friday morning, I was told. So we will be here on Friday doing a shorter schedule than usual, but I will be guiding through the morning. I don't think I'll be doing the closing hour. Nobody said anything to me. Don will let me know in the chat right now. Energy Volatility Friday sets the inflation tone heading into Powell's December call. And what we mean by Powell is the head of the Federal Reserve. OPEC will also be meeting this weekend as well to make some calls on what they're going to do with production heading into the rest of the year. I have lifted my short positions in the energy side. I am no longer shorting the XLE. What I am looking for on energy at this exact moment is a move to overbought or oversold. What I mean by this is I want the RSI and the MFI to both push toward 70 on the upper bound or 30 on the lower bound before I make my next trade linked to the energy upstream oil and gas side. I wait constantly for just moves into these barriers. That is where we get into an opportunity to turn around and go contrarian long or contrarian short based on overbought and oversold conditions. Watch the OILU. It is your cleanest way to trade the energy sector. And speaking of sectors, the only sector that is positive right now in terms of momentum is the healthcare side. LABU looking very strong. And as I noted the other day, a lot of insider buying has picked up in the biotech sector. All right, before we get to the runner, real quick, we talked a little bit about the December rate cut expectations. We have seen conflicting Fed speeches around after the shutdown. There's a lot of uncertainty. There are a lot of questions, but all signs are now starting to point toward that rate cut and the possibility that we move lower. That is to help alleviate a lot of that pressure that we have witnessed in the broader markets, repo markets, and Japan. Rate sensitive assets are on edge. Financials, real estate, small caps still under pressure. Watch the rate expectations on the Fed fund futures. Watch CME Group for what their expectations are. Kind of making sense that you want to keep a very close eye on one thing and one thing only. Have the UVXY open and the SVXY, either one, whatever one makes you feel better. This is the short of the volatility. When this is rising during the day, when this is pushing higher, volatility is abating. That's where if you are a day trader, you can look to the higher beta stocks for a little bit of alleviation. But the UVXY, this only breaks out if something is wrong, right? It only breaks out if something is wrong. It is currently trading above its 50-day EMA, hovering at that 8. We get back under that 50-day moving average. That can be a sign of a little bit of pressure coming out of the market and looking for that squeeze. Anything hawkish could obviously unwind risk quickly. We still remain in the exact same setup where we were, short trading week plus that early close on Friday. Black Friday spending and consumer data will front load that risk. Small surprises can turn into sharp directional swings. Look for a lot more chop as we go. Beware gap risk. Liquidity remains the story of this market, and options prices often misses the magnitude in short weeks. Event trading around retail names and consumer sentiment. You could see obvious momentum in names like Walmart. Finally, this narrative is not going to go away, even though I don't care about the valuation story. Everybody else does. After a huge run, AI infrastructure stocks are still under pressure. We've seen some of the weakest tech for November since 2008. A single earnings miss, keep an eye on this, can trigger rotation into value and other types of assets. We have Dell tomorrow. That's going to be a critical move for names like Intel. Track relative strength between AI and old economy sectors. Look for volatility spreads between tech and S&P 500 names. And again, earnings surprises can flip the rotation overnight. All right. Hey, I didn't even mean to click this. Black Friday is Friday. So do yourself a favor. We have a huge Black Friday giveaway going on right now, and I have a new masterclass coming up and some new trading services that will be lined up for 2026. So get your Garrett credits. 623-244-5657. Use the code word Garrett and don't spell it wrong. I will get very upset. You will not get the 2-for-1 credit if you spell my name wrong. Turn $1 into 2. Pretty simple. Code word Garrett, 623-244-5657 with your chance to win a F10 trading laptop. Get your credits right now. Don't even listen to anything else I'm saying the next 20 minutes. Just call that number or put 1 in the chat and we will have somebody reach out to you. Okay. A little bit of a break. I wish I had some music or something, but I don't. All I have are the remnants of some very bad coffee. Not working. All right. So looking in the chat real quick, Stardust, what's going on? Secret Agent Charlie. Gert? I don't know what that means. MLI. All right. So we're back into these names, right? Mueller Industries, Industrial Fabrication, pure momentum. Just an absolute ripper on momentum this year. And that's exactly what I'm looking for. I'm looking for a continuation of trend. We've seen a lot of chop. So on this daily, what I like is the smooth momentum that we have had going up. You could see these little sell-offs that have transpired. Those have been directly linked to broader market liquidity. But MLI, based on everything else that's going on, very strong company, very strong ROCI, very capital efficient business, doing very, very well. So what is the trade? Well, we're looking at momentum at the moment. If we start to see 2-3 days of positive inflows, that's going to make MLI even more attractive. Now, if you have a put spread opportunity, go under the 50-day moving average. Pretty simple. You can see that this is held up very, very nicely. These sell-offs that have transpired have been directly linked to broader market outflows that are not in any way really true of a true focus on the stock itself. Copper prices are currently at 497, so all eyes on what's happening with China to see if they're going to continue to provide that support. But MLI is a great momentum stock, and I would be looking for a move back to the 110 level. General Motors, I don't like trading this stock. It's one of those legacy names that kind of drives me insane, but it's the same thing. You see the sell-off in April. You see that small drop in July. You see that small move in October to the downside. All of this is heavily linked, once again, to broader momentum and broader liquidity issues. GM has just been a solid stock this year at showcasing improvements in their underlying fundamentals. And I'm looking for a swing positive on that MACD, adding this to the list. Possible put spread opportunity here. This is not a stock that I want to own. It could be a stock that I want to trade. The possibility here is to sell a relatively cheap spread to the downside under the $60 level, using that capital from that spread to then buy an out of the money call. Because if momentum returns back to this market and consumer cyclicals do get a little bit of a bounce heading into December, the upside for General Motors is somewhere around $74, $75 in short form, and it is a cheap stock to trade. So selling a spread down here and trading out of the money, a little bit of a lottery pick if you can. And then CL, which again, Colgate-Palmolive. Consumer defensives have been getting a bid. We've been looking for this for a while, looking for a continuity of momentum coming off that November low. Opportunity here with rate cut expectations increasing. That can give us a nice simple trade. I still like the exact same thing. Selling spreads to the downside on a name like this. I know it isn't the sexiest thing in the world to do. I know that people want to try to make 100% on every single trade. But Colgate-Palmolive is not that type of company. It's not that type of stock. And you want to take what the market is giving you. If this market is giving us a little bit of a upside momentum for something like this, then going out and selling the 77.50 for December and buying the 75 puts us in a position that's pretty simple. You are putting up $208 to make $42. And what this trade looks like, you are selling the 77.50, you are buying the 75 for December 19th of this year. Your max return on risk is 20%. Your probability of profit would be about 79.5%. So you're not aiming for 100% gain. You're simply looking for this stock not to break back under its 50-day moving average. And if it does break back under its 50-day moving average, you buy back the stock. But if you are selling that spread, the 77.50, you sell the 77.50 put, you buy the 75 put. There's a reason for this. You don't have to put down $7,600 for a cash secured put. Instead, you're setting up the numbers the way that I continue to recommend people do this. You're looking for an 80% probability of profit, a 20% return. And if the stock does fall back under its 50-day moving average, you simply buy back the put spread at $79.71. That would basically be about a 5% loss. Okay, so you're putting money up to make 20% and you're willing to lose 5%. Pretty simple. All right, to the downside, what do we got? Well, I'm not very bearish this week, and that can obviously change. I am invited to change my opinion anytime I want, but Datadog has been a, well, dog, 25% move down on this stock in that range in the last couple of days. Software technology applications remaining under a lot of pressure. In this environment, I may sell a spread to the upside to finance a put to the downside. But right now, the stock looks very, very weak. We are not oversold. We continue to see momentum weakening on that MACD. I think you got maybe 1 or 2 more days of weakness if this market does continue to persist with selling. TREX, don't know what you do. Trex Corporation, Industrial Products. This is a name that has continued to do this kind of lower highs, lower lows shuffle. So what's challenging about this is it's hard to short a stock that seems to be consolidating. And we added this to the list likely because of just the way that the pressure is. This is actually oversold, and we are starting to see some improvement in the MACD. I don't know anything about it. I would actually be looking at a possibility of selling some spreads on this, but I'm going to scratch this relatively late just because I don't know what it does. Maybe you tell me it's in building products and equipment. I could, that doesn't mean anything to me. CGAU. All right. Centerra Gold. Great company, by the way. You have permission to go back into gold stocks. You have permission to go back into these names. With CGAU, one of the unfortunate elements of this is that it is not a name that has a lot of opportunity in terms of a options chain, but it has been a great momentum stock this year, and it has traded a little bit sideways for a period of time. If you go out to January, or maybe you go out even to April, April, January, if you sold the 10, you would have to effectively buy the 750. What this can set up is actually a mildly attractive trade. It's about a 10% return. So the thing about gold stocks and the thing about a lot of these names, like gold, people say, well, gold doesn't pay income. It doesn't give me a yield. If you know how to trade it, it can and it will. And in this case, if you sold spreads on some of these bigger miner companies that you're willing to purchase at a lower price if it pulls back, well, something as simple as selling the 10, buying the 750 on CGAU, which once again, I'm more than happy to buy this stock at around $9.80. It would set up about a 10% return for an 81% probability of profit. A little bit of dip buying. Anyone who says gold does not pay income doesn't trade. Alibaba, it's in the name, it's in the news, right? Disclosed the Quen app, 10 million downloads. One of the big issues right now with this is all eyes on liquidity and all eyes on China. One of the major issues remains that Japan, in its stimulus and its weakening of its currency, that puts pressure on China as well. What I'm specifically looking to do with Alibaba today is just trade the momentum as it comes. So 15-day moving average, if we can see a little bit of a pop, we can see a little bit of an improvement. We get up to that 150, 160 level, forgive me. My focus is going to be looking for a move back to around 164. So I would be buying an in the money call and selling out of the money, looking for a short duration and just hoping that momentum remains strong. EWJ, obviously, this is a no-brainer. Japan is printing money. That is typically bullish for a nation, simply because money flows into risk assets and it shores up liquidity in the financial system. And then the CQQQ. Can this get off the mat? This will be a major, major influence on whether or not Alibaba can rebound. If this was a low, if it was a short-term low, the pressure, the upside remains very strong for China. And I know that Gianni will have some commentary for us later today on these Chinese momentum stocks. All right. Eric saying plastic wood. I don't know what that means. I didn't get your CL trade. Was your suggestion to buy the spread now or wait to revisit the MA? My focus was to sell a spread, to sell to the downside. The purpose of a market is to sell. XHB vertical spread 105, 103. Home builders, huh? All right. Well, I'll take a look at that one. Ugh. I'm going to be very honest with you. I would not, I, me, I, James Garrett Baldwin, under full sound of mind and body, I would not sell a spread on the XHB until it got back above its 50-day EMA. Just saying. Look, gold doesn't earn a yield, but if you trade the position, if you sell spreads, it will earn a yield. You just have to change the way that you think. It's not that complicated. All right. Hey, let's talk about some stuff. Let me show you what happens when momentum turns negative. It has been a week and a half. It has been a period where we went red and we stayed red. And as I have said time and time again, when it comes to understanding how these markets operate and how liquidity operates, we're going to keep a very close eye on what's happening with Charlie, the FNGD, right? We're still above that moving average. That's still a little bit concerning. But here's the thing. It's very important to note that these types of moves with volatility, they only happen when our signal turns red. And our signal, obviously, turned red on the 13th. So what happens in that environment? When I'm like, we're not making this stuff up. Now, I'm going to show you a couple of charts of what happened and kind of walk you through what's going on. But before we do this, let me take a moment to celebrate me. I don't do this very often. My daughter beat me in Scrabble Junior, which again is kind of a rigged game. The first time when I started dating my wife, I played her in Scrabble and I beat her 740 to like 100. And she's never let that go. But my daughter beat me in Scrabble and she thought it was important. And then I took her bowling this weekend and that happened. 203. I am an average 94 bowler. 203. So, Amelia, wherever you are, you're at school. Bang. All right. Got that out of my system. Feeling good about that. Something nice happened. That said, here's a chart you need to watch. Look, momentum turns negative, and you have that 14% pullback in the high beta momentum. This is from Zero Hedge and from Goldman Sachs. Now, this is the key thing. This doesn't happen if our signal is green. When we go red, I'm serious about it. I'm very serious. These are the types of moves that are possible. And momentum evaporates, and there is a huge issue in the broader market. And it's not limited just to the high beta names. It's also volatility. CBOE, BOE, TLT dipping, CBO volatility index increasing. This is a week later. And then here's the big question. We just had a 3.5% move on an intraday reversal that just transpired. This is the historical returns. The median forward returns after extreme intraday reversals. 10% in 3 weeks. And we are heading into December, and we are heading into a seasonal time. Now, obviously, I want to see this turn green before I hit the gas. But I'm going to be contrarian bullish right now. I'm going to be contrarian bullish. The only real thing that has me concerned is this. That's the CTAs. And Goldman pointed out that they could dump another $220 billion in stocks if there's continued pressure. But here's the real reality. I don't trust Goldman Sachs. I've never trusted Goldman Sachs. I think they're full of it. Remember, I told a story. The most important lesson I've ever learned. It was 2008. Goldman Sachs had just made a recommendation saying that oil prices could go parabolic up to upward of $200 a barrel. And I went out with a bunch of guys who were Chinese wall working with commodities with Goldman Sachs. And I said, wow, you guys are going to make a lot of money if oil goes to 200. And one of them laughed and said, oil's going to 40. I have never trusted anything that Goldman says. So that's important to note. Here's the last thing. What is driving this tape? What is driving tape in this environment? Same thing that I've been talking about. It's passive flows. 40% of the tape right now is ETFs, passive buying in the retirement funds, the pensions. That's what's bidding all this stuff up. So if we get a return on momentum, and that return on momentum is going to be very easy. The FNGD is going to drop under its 50 and its 20-day EMA. We're going to see a rebound in these key moving averages for the SPY. It might not be a long rebound. It just has to be long enough. And if we get a little bit of a pop, it's going to be all the high beta names. It's going to be all those stocks that are linked to the passive investing flows. Exactly what I talked about last week. NVIDIA, Apple, Amazon. All of the AI names. We are not focusing on fundamentals. We are focusing on collateral. That's what this market has really evolved, it really devolved into for the last 5 years. So we get a rebound on the SPY, go long NVIDIA. Go long high beta. Even look at HIBL. Momentum returns on the HIBL and we break back above that 8, we got a straight line up. But if it hits these resistance and rolls back over, it is this. And I know that it sounds like I'm hedging, but I'm not. I'm presenting you with what the story will be in either scenario. It'll be Santa Claus rally, which is really going to be based on the back of the Fed ending its quantitative tightening, some accommodation from the Fed, $150 billion from the Treasury General account that's going to be released, more liquidity, Japan pumping. Bullish. What's bearish? We come up to these key EMAs. Like every other momentum event that has happened, and remember, go back to April. We had a short squeeze, took us back up to the 20-day EMA, and the funds sold right back into it. That is your line in the sand. That is what your eyes have to be focused on. 20-day EMA of the SPY, the Qs, the Russell, and any high beta name. Any insight on Beth? What is that? Who's Beth? Bitcoin, Ether, market. Ugh. Well, once again, I'll finish on this. Bitcoin is the purest representation of liquidity in the financial system. So it is front-running liquidity expectations. And right now, where we have seen this has moved to oversold, I'm going to point something out. Pretty simple. Oversold, 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 oversold. What do you notice? Small squeezes. $4 or $5. That's my insight. My insight is not, hey, I'm long this. My insight is I'm long for like 3 days. That's the environment that we are in. ET is a pipeline company, a toll collector. They make money by moving product regardless of the price. Look, Energy Transfer is the best. It's the best. Okay? And once again, ET, EMO, some of the other pipeline closed-end funds, you buy them, and that becomes a source of trading income. That's the thing, right? That's it. All right. 9:21, Don's coming up. He will not be playing. He's going to play Jethro Tull this morning, I bet. I'm going to go find some additional coffee. I will be back today at 3 o'clock for the close. If you have any questions, support at TheoTrade.com. and put Garrett in the subject line, 2 R's, 2 T's. And once again, just another simple reminder, 623-244-5657. Turn $1 into $2 by buying Theo credits for Garrett. 2 R's, 2 T's, everybody. I will talk to you all later today. I hope you have a great trading day, and we will catch up on the other side. Take care.